Whether you think bankruptcies could derail that relatively more constructive tone that Sarah rightly sort of suggested you seem to have. I mean, you gave an interview to the Financial Times at the start of this month. Their title was Fed's Bullard says risk of financial crisis remains. So was that a slight misrepresentation of your general view?
No, I think it's fair, because I always also say that's my base case, what I just told you, but then there is downside risk to that case. It's not my base case, but if this can go badly, we're in the middle of a crisis. Things can take twists and turns. The disease itself can morph on us. I don't think that's going to happen. I think we're in good shape, but you never know. And that's why we have to be very careful. It is a time of high risk for the U.S. economy. You could get into a financial crisis. You could even get into a depression scenario. Again, not my base case, but if that happens, you'll get even worse. You'll be worse on both dimensions. You'll have a worse economy and worse health outcomes, both. So, that's why we have to be very careful in this situation to try to get back to work here.
Well, we're facing some key deadlines when it comes to the fiscal support that has helped this recovery that you're talking about. What happens when those PPP loans and funds run out? What happens when that bonus unemployment check expires at the end of July? What happens to the economy then?
Yeah, a lot of people are talking about this, but, a bill is obviously brewing in Congress. Many key players have signaled that there will be a bill. You've got politicians facing an election in the fall with a green light to spend more. I mean, how likely is it that they're going to pass something? I think the question is just what's going to be in there and exactly how will that be structured? What's the optimal way to structure it? It makes sense that the details would go down to the wire, because that's the optimal way to negotiate. And it makes sense that they would want to get the most information they can in this volatile situation before they make a commitment on what the fiscal policy is going to be for the second half of the year. But I would say we'll get a bill, and there'll be plenty of resources there.
If things do get a lot worse for whatever reason, President Bullard, should negative rates be on the table, and should Fed purchases of equities possibly be on the table?
Yeah, I don't think either one of those is very likely. The committee, many members have said that they don't think negative rates are a good option for the U.S. They haven't worked all that well in Japan or in Europe. So our structure of our short-term funding markets is different. So I think that's kind of a way down the list of the kinds of things that we could do to be effective. I think we've got an effective policy today. We've got lots of implicit forward guidance in place. We think we're going to keep rates low. Markets think we're going to keep rates low. I think that's exactly right. And we're going to try to get through this. So I'm not really seeing that as a possibility.
Well, let's talk about what you are buying then. Fed going into directly buying corporate bonds from Apple and McDonald's and Coca-Cola. How far will this go?
Yeah, we're in there with a 13.3 program. Those programs are, for emergency situations. They require the approval of the Treasury Secretary. There was some concern, as you guys know well, in the March-April timeframe that the corporate debt market would freeze up. So we did get in as a backstop, I would say, in that market. The actual amounts that we're buying are tiny. The program will eventually expire here. So I think we did the right thing there. We wanted to be sure that that market was functioning, that it didn't freeze up. If you get a market freezing up, then traders won't trade the assets at any price. And that's when you get into financial crisis. So we have avoided that situation, at least over the first 90 or 120 days of this crisis. So I think that was successful. And probably just let that go for now. And yeah, we don't really want to be in the game of trying to guess the corporate, which which corporate debt is the right corporate debt.
What about the stock market? I mean, we're looking at near session highs right now. Maybe the market likes your enthusiasm and optimism base case for the economy in terms of the forecast. The market really has shown itself to be numb to some of the bad news lately around coronavirus cases surging, hospitalizations rising, even some of the economic news, which, yes, is coming in better than expected, but still paints a picture of double-digit employment and pretty steep challenges. Why do you think that is? Why do you think the market has taken off so much? And then why tech in particular? Tesla's up 45% in 5 days. What does that signal to you?
Yeah, I don't know if all these valuations are exactly right, but the general tone has been that you have a powerful tech sector, which has really led the U.S. economy. And of all things to happen, this is putting a tailwind behind that process. So those companies are looking even better in an era where mobile technology has proven to be a godsend. I think one of the lessons of the second quarter, which just finished for the U.S., is that the work from home is extremely powerful. And it makes sense. We've been trending toward mobile technology for a long time, and here we moved into it in a wholesale way. And lo and behold, you can get a lot of your work done and a lot of your product produced, a lot of GDP produced through that process. So that's very encouraging, I think, and that's something that wouldn't have been around 15 years ago in the way that we're using it today. So that part, I think, makes sense. I think also the market's read on this situation, which is that the bottom will be April, which I agree with, and that the initial shock is big and confusing, but was not as big as what was initially forecasted. You might recall the Imperial College study saying 2.2 million fatalities in the U.S. Current projection for 2020. Current projections are less than a tenth of that. So yes, it's bad. Yes, we've had to adjust, but it's not as bad as what would have been on the radar screen during that March-April period. So it makes sense that markets would rebound a lot from the pricing of that period.